Tesla, in my opinion, is a pass right now, a hard pass.
Tesla shares right now sliding after the EV maker slashed the price of its Model 3 and Model Y vehicles in China. The stock is down nearly 5% in the session.
Tesla, 52-week low, cutting prices in China. Gordon Johnson, bear of all bears on Tesla's with us. Always love when he's on the show to provide the other side.
So when Elon Musk says he's going to go full tilt and produce as many cars as he can, that should scare the bull. That is a bad thing, not a good thing. Tesla's real margins, including the costs associated with those plants, are significantly lower than what they're reporting. I think Tesla's probably a $20 to $25 stock.
In this video, as expected, the Tesla bears have woken from their hibernation and crawled out of their caves in droves to slam the company and the stock, advising investors not to touch Tesla stock with a 420 quadrillion foot pole. Yes, that's right. With Tesla stock at 52-week lows, despite near flawless execution over the past year, and past decade and a half to be fair, the Tesla bears are doubling down. I'm sure this will age well. And if you guys could momentarily direct your attention to the number on screen, I'm sure you know where I'm going with this. That right there, 184, is the number of exclusive videos currently available on Patreon and counting. If you're not already a member, you can click the card in the corner or the link in the pinned comment to join. 200 is just around the corner. Just in case you're wondering, in the last 2 days alone, I've posted over 30 minutes of exclusive content. Just saying.
Tesla, in my opinion, is a pass right now, a hard pass.
And on today's list of comments that will not age well, remind me to check back in a decade and roast this guy. Tesla stock today at 52-week lows, a hard pass. Kind of reminds me of the same idiotic comments we heard about Tesla stock in March, April, May 2019. Go have a look at the Tesla stock price chart at that point versus now. I'll wait.
We also had the news today that cutting prices 9%. That's never a good thing.
All right, Boris, that's a wrap. Stop talking. You're embarrassing yourself. It's only going to get worse from here. Tesla cut prices in China by 9%. That's never a good thing. Let's go high level, like real high level, like basic shit, like even a potato could understand this concept. In order for Tesla to sell, let's say 20 million electric vehicles per year in the future, I can guarantee you they won't be at the same current average selling price as they are today. Tesla's ASPs, average selling prices, will need to be lower. Let me explain one more time, because as we just heard, price cuts are never a good thing, except when they're necessary to get to your goal of 20 plus million electric vehicles sold per year. Step 1, produce a low volume, extremely expensive vehicle. Use the profits from that to develop your next medium-priced, medium-volume vehicle, and then after that, you saw this one coming, didn't you? Build upon that to release an even lower-priced, mass-market, extremely high-volume vehicle. You notice an integral part of this plan is price declines. They start high, eventually they become low. I don't want to be too hard on this guy, but price cuts are never a good thing is one of the most idiotic statements in the history of idiotic statements. Tesla will continue to cut prices on their vehicles indefinitely. That's how they reach mass market adoption. That's how they reach 10, 15, and then 20 million vehicles sold every single year. Price cuts are part of Tesla's plan. They're not a bad thing. They're in Tesla's own fucking plan. If Tesla isn't able to cut prices over the long term, that is a bad thing. Now, I just want to talk a little bit more about these China price cuts. In case you're new around here, Tesla has had their hand forced. They have had no choice but to massively raise the prices on their vehicles globally over the last 18 or so months. Tesla doesn't want the price of their vehicles to be as high as they currently are. But they've had no choice because their wait times are absolutely out of control. They're unreasonably long wait times. So Tesla's been forced to bump up the price of their vehicle over and over and over, and spoiler alert, they've still sold all of the vehicles they've made, despite the massive price hikes. And I mean massive. If memory serves, Tesla's Model Y alone, one of the trims has increased in price by 34% in the last 18 months. Obviously, at some point, as Tesla increases production, they can supply more vehicles. Tesla will be able to lower the prices of their vehicles because they'll have extra supply. You understand, right? If they're making more vehicles, they can sell more vehicles, meaning the wait times aren't going to be as long, meaning they don't need to jack up prices unreasonably high just to keep wait times at slightly more reasonable levels. Now, I have a hypothesis. I believe that many Tesla bears suffer from selective small brain syndrome. They may be generally very intelligent, but as soon as they focus their attention on Tesla, their brain disappears. Well, becomes a speck. Then they just can't think. They don't make sense. Nothing works. Doesn't compute. Prices go down must be a bad thing. That's the only explanation. Tesla will continue to cut the price on their vehicles indefinitely. Okay? There'll be occasional points in time where they need to go up because of materials cost or demand just to keep things in check. But the trend over time will be down. Significantly down. That's their goal. That's literally in their fucking master plan. It's on their website. It's been there since 2016. This won't be the last time Tesla cuts prices, and it won't be the last time the Tesla Q dolts come out of their caves and go, oh, that's a really bad thing. There must not be demand. Jesus Christ, dude. Now, I know this is really complicated, at least if you're a Tesla bear. Let's try and make this as simple as we possibly can. As Tesla increases their production as in they make more vehicles, just in case you don't know what increases production means, they will benefit from economies of scale. They can buy parts in bulk. They can buy materials in bulk. You basically get a bulk discount, okay? It's simplifying things, but again, we are talking to Tesla Q adults here, so got to make it super simple, okay? Are we all playing along at home? This is a reasonable point, right? Tesla scales up production. Their cost per vehicle sold will actually be lower overall. Also, now this is really crazy, I know, but again, we've got to go through this one. If Tesla has engineers who aren't morons, and their job is to find ways to do more with less, to delete parts, processes, and by doing so, costs and time involved with producing vehicles, this, separate to economies of scale, will also reduce Tesla's cost to actually produce their vehicles. So we have two very strong forces that will drive Tesla's own cost to produce the same vehicle lower over time. If Tesla's cost to produce the same vehicle over time continues to decline, and Tesla is aware that a linear decrease in the price of a vehicle will create an exponential increase in demand, and Tesla has plans to sell 20 million electric vehicles per year in the future, are you ready for the very important part? This will allow Tesla, as they see fit, at their discretion, from a place of power and strength, to selectively adjust pricing, with an overall trend going down, to continue to ensure they can sell every vehicle they produce for years, if not decades to come. I think a better way to describe Tesla's price cuts is, Tesla price cuts are always a good thing. The fact that Boris here, or whatever his name was, no offense, just I didn't pay attention, doesn't grasp this fundamental fact about Tesla, their business model, their thesis, their publicly disclosed plan. It's literally on their website. The fact that Boris doesn't get this leads me to believe that Boris probably should not have spoken about Tesla. It's okay not to know anything, but if you don't preface your statement with, I don't know anything but, here's my uninformed opinion, well then I'm free to roast you for being an absolute fucking moron. Please let me know in the comments below if you're following along. Tesla's goal is to continually cut the price of their vehicles over the long term. And yes, there'll be bumps in different directions over time, sometimes a little up, sometimes a little down. But the trend will be down. That's their whole plan.
To me, that's all headwinds. I think Tesla right now is a hard pass from every angle. You don't even have to worry about the Twitter sub-story. Just on the car issues alone and the slowdown in China, what makes me very vulnerable to be long that stock. So
okay.
I would definitely stay.
All right, guys, please set a reminder. Check back in a few years' time. I'd like to put this clip on top of Tesla's stock price chart from where he made these comments versus where it ends up.
Tesla, 52-week low, cutting prices in China. Gordon Johnson, bear of all bears on Tesla's with us. Always love when he's on the show to provide the other side, because we usually have more people that are bullish. CEO, founder of GLJ Research.
Is Nicole low-key trolling Gordon Johnson, or was that an innocent mistake?
Good to see you. Tell me about your outlook. I know you still think it's going lower, right?
Yeah, thanks for having me, Nicole. Great to be here. So they cut prices in China roughly 10% today, 9%. So what does that tell you? So Tesla has effectively gotten to a level of roughly 1.3 million of annual car sales. Yet they're now cutting prices in China, despite the fact they're intentionally running that facility in Shanghai below 100% capacity, and they have two facilities in Texas and Berlin at just 10% capacity. That tells you that at 1.3 million cars, demand is a problem. China is their biggest and only profitable market. So think about this, right? Tesla's about 15% penetration of the luxury market. You've really never seen a car maker get above that. BMW is roughly the same, yet their sales have flatlined. Yet BMW is valued at $45 billion. So if Tesla had a similar valuation, which, by the way, getting to 1.3 million cars is great from Tesla's perspective, but they should be valued like BMW in our view, not at $600 billion. If they're valued like BMW, you're talking about a $15 per share stock. You're talking about a roughly 90% haircut. These price cuts show you that they're having issues with demand.
Well, we've already debunked the idiocy of the claims around the price cuts, meaning they're having issues with demand, so nothing further to add.
And I want to talk about their margins, but I just wanted to highlight that.
And, you know, I want to talk about the margins too, but I have to tell you, I had a great conversation with some people that were more bullish than you, which is easy to be. Ross Gerber and Steve Wesley, who sat on the board of Tesla for 3 years. And some of the themes they were discussing was that demand is still real, and I know there's competition, but there's a backlog, there's demand, there's record production, there's 4 plants around the globe, that Tesla's still hot.
Yeah, I mean, they're speaking in hyperbole. I saw that interview. Listen, these are the facts.
Now, if you guys haven't already picked it up, Mr. Humiliation Fetish himself speaks in a very special language. For example, when we hear, listen, these are the facts, we can guarantee that what is to follow is anything but facts, and it's not worth listening to, but let's listen anyway to these supposed facts.
They produced more cars than they sold in Q3. They produced more cars than they sold in Q2, 2 consecutive quarters. The last time they produced more cars than they sold was in 2017. If you're producing more cars than you sold, then demand is not strong. That means demand is weak. Their book-to-bill is below 1, which means they're delivering more cars than they're selling, looking forward. And, you know, the facts are the facts.
The facts are the facts. You can't argue with the facts because they're the facts. Except, let's argue with the facts. This is a truly ridiculous claim. What Gordon is insinuating here, in fact, he's straight up saying, is that the vehicles that Tesla produced in Q3 that was still being delivered to customers. They were on boats. They were in shipping docks. They were getting unloaded. They were getting loaded. They were going on semi-trailers, getting ready for customer deliveries. In case you didn't know, not every customer that buys a Tesla lives inside the Tesla factory. Therefore, they can't take instantaneous delivery. He's claiming that the gap between vehicles produced and vehicles sold, aka vehicles in transit, is evidence that they can't sell the vehicles that are currently in transit that have already been sold to customers. I mean, the facts are the facts.
And this is all happening with them running their Texas and Berlin plants at 10% capacity. I mean, this isn't rocket science. They're only running 2 plants at 10% capacity, yet they're having to cut prices and they're producing more cars than they sold. So when Elon Musk says he's going to go full tilt and produce as many cars as he can, that should scare the bull. That is a bad thing, not a good thing.
Talk about grasping at straws. This is literally the best argument this guy's got. If Tesla are aggressively increasing global production, that's a bad thing. In fact, investors should be concerned. That's a fact.
And again, I want to talk about the margins. Hopefully we have time.
Yeah, no, tell me right now.
So real quick, today we got the 10Q, right? We got the 10Q. And what we found out in the 10Q is their construction in progress, which means the costs associated with ramping the Berlin plant and the Texas plant are actually higher in the third quarter than they were in the first quarter. They're about 4.5 billion now. They were about 4.3 then. What that means is prior to them doing the massive, opening day for their Texas and Berlin plant, they're actually capitalizing more costs now than they were pre-opening. Those are costs that should be running through the income statement, which means their margins, in our view, are grossly overstated. Again, they're capitalizing the costs associated with ramping those plants on their balance sheet after the grand openings. This is absurd in our view, but this is the kind of accounting that we get in today's environment. Tesla's real margins, including the costs associated with those plants, are significantly lower than what they're reporting. In addition to that, Tesla says they have industry-leading gross margins. If you include R&D and their gross margins, which every other automaker does, they rank 11th in gross margins, not first. And this is something that bulls have touted for years. So once again, you have grand misconceptions and deceptions with this company that people just aren't talking about.
So if that's true, Gordon, how do we explain the mountain of more than $3 billion of cash that Tesla put in the bank just from Q3 alone? Where'd that money come from? Like, that's actual money in the bank, like a big mountain of it, multiple billions of dollars in a single quarter, primarily from selling cars that don't have good margins, apparently.
Okay, now I need the bullet points, my takeaways that people are going to walk away from this interview and say. Right now, when we're seeing Tesla, I'm hearing people saying fair value is 300 and higher. It's at 204. Where do you think it should be? Just quickly.
Yeah, I think Tesla's probably a $20 to $25 stock, and it's very simple.
Surely I'm not the only one who noticed Nicole's response to this absurd price target. Let's watch that again.
Yeah, I think Tesla's probably a $20 to $25 stock.
That awkward moment when you're trying to be a super polite host, but one of your guests says something so idiotic, your face can't help but reveal your true feelings with a very clear and obvious smirk.
The auto industry trades at 5 times earnings. Right now, Tesla's trading at roughly 75 times earnings. When people realize that Tesla's real growth rate is not 50%.
In today's episode of That's Just the Facts, let's have a look here. 55% automotive revenue growth year over year, 56% total revenue growth year over year, and 55% year-over-year growth in adjusted EBITDA. Then, of course, there's a mere 62% year-over-year increase in net cash provided by operating activities. So Gordon is absolutely right. Tesla is not growing at 50% per year. You heard it here first, ladies and gentlemen. That's just the facts.
Right? On the conference call that happened last week, Elon Musk said, we're not going to grow deliveries at 50% this year. That's the first time he's ever admitted that. When people realize this is just but right now, a second-rate, middle-of-the-line car company, they're going to be valued as such. 95% of the revenues come from selling cars, 5% from a profitless energy division. So the point is, I think that there's going to be a massive haircut done to the valuation of this company as people realize the growth has stalled. And I think that's a big deal.
Look, he's right. I'm sorry, guys. I was selective. I cherry-picked the data just to paint a bullish narrative, but he's right. The growth is stalled. There's no question about it. Let me prove it right now. Ready? Minus 42% growth on automotive profit. Minus 47% growth on total gross profit. Minus 84% income from operations. Minus 103% growth in net income attributable to common stockholders. Minus 98% growth in EPS attributable to common stockholders. Minus 148% in free cash flow. As you can... Oh, wait. None of those had a... Oh, I thought they were all negative figures, but that's actually... they're all positive figures. Gordon, can you please show me on the chart where Tesla hurt you? I mean, where the growth has stopped? I can't find it. I'm really confused right now. Where? He was talking about the operating expenses. That's where the growth has stalled. They only increased 2% year over year, while net income increased more than 100% year over year. So that's what he was talking about. I think he misspoke. What he really meant to say was everything's grown except their operating expenses.
And what about these other names? I mean, you have Ford and GM and NIO and Rivian. And are there other names that you like better that think will leave Tesla reeling? In the meantime, Tesla was just voted #1 car in Germany in September. But tell me, I mean, who's chomping at the bit here to
Consumer
take Tesla
Reports
down?
ranks them, I think, second to last in quality. And what car in Europe ranks them dead last in quality? They rank last in autonomous driving. But to your question, we've always said we like BYD. That is the company we would play from an electric vehicle perspective. We said that for years, and I think we've been proven right thus far.
Right, understood. And I am curious to hear, just for Tesla shareholders, and this is the question I think a lot of Tesla shareholders are concerned about, and that is Elon Musk and Twitter and everything else Elon Musk that he works on, and how it could maybe negatively affect Tesla because he has to sell off shares or raise capital.
Yeah.
Thoughts on that?
Yeah, look, Elon Musk, the media, and I'm not accusing you, but the media has given this guy a pass. He said he was going to make ventilators. He delivered, CPAP machines. He said we're going to have 1 million robo-taxis on the road in 2020. Did $1 billion plus capital raise on that. Didn't deliver. FSD is clearly, in our view, one of the biggest, vaporwares we've ever seen. FSD does not exist. In 2016, they had a video on the website that said, this car is driving itself. Clearly, it wasn't. That video was proven to be completely deceptive. So with respect to Elon Musk, I think there's a lot of risk associated with him. Again, we congratulate Tesla on getting to 1.3 million cars sold annually, but that's a company valued at $45 billion, not $650 billion. And I think, unfortunately, people are going to come to that realization this year.
Right. So it's not that you really don't like Tesla. It's just that you think it is extremely highly valued. I mean, we know that the truck is coming out soon. Self-driving is something we've talked about. They have record production. It's not like they're, failing and not producing anything. So we'll have to discuss this more. Gordon Johnson, thank you so much for being on with us.
2 quarters in a row, they haven't sold what they produce. That's a problem, Nicole. You know that.
We'll have to discuss it further. Gordon Johnson, CEO, founder, GLJ Research. Thank you.
So if you're playing along at home, Tesla price cuts mean there's no demand. Tesla investors should be really concerned about Tesla expanding their production capacity. Tesla should be valued like BMW because they're just a car company. Tesla is currently committing securities fraud, accounting fraud, and somehow getting away with it. Tesla doesn't have industry-leading profit margins, despite the industry-leading mountains of billions of dollars they're producing every quarter. Tesla stock is worth, I don't know, I was too busy looking at Nicole's smirk, $25 a share, $30, something like that? And investors are finally going to realize that Tesla is just a car company sometime later this year, or maybe next year. And of course, BYD is obviously the superior company, and therefore the superior stock. That's the facts.
Stocks here a little changed, but China's still a mess. Caroline, we've got Tesla down pretty big here. What's the latest?
Hey there, Oliver. Yes, Tesla's down about 6.5% right now on news that the automaker cut prices on some of its cars in China. We know, of course, that China is the biggest EV market in the world right now, and competition is heating up. So Tesla is slashing the price on the Model 3 sedan by about 5% and cutting the price on the Model Y SUV by about 9%. They're the first price cuts by Tesla in China so far this year, and reverse hikes from earlier this year amid inflationary pressures. We did hear Elon Musk, Tesla CEO, basically say that material costs are coming down, expects those to continue coming down. He had said that just a few days ago, and also tweeted last week that a recession of sorts was underway in China. So of course there's concern about what these price cuts could mean for average selling prices and margins, but competitive pricing could boost sales as competition heats up in China. So kind of, both ways of looking at it. But right now, shares are under pressure, down about 6.2%.
Yeah, at least they're being fairly reasonable here. There's two ways of looking at this. Oh, there's no demand, or maybe Tesla's just reversing those insane price increases they were forced to make about a year ago. Fact check, the current prices on Tesla's vehicles in China are about where they were a year ago. In the meantime, they went up dramatically because of insane demand, and now they're back to where they were. Still with industry-leading profit margins, despite what Gord Donkey Johnson said. If ever you needed proof that the stock market is based on the collective brain damage of many people misinterpreting, misunderstanding, panicking, and not thinking at all, Tesla stock down today on no demand in China. Great example. Thanks for the discount, motherfuckers.
Yeah, for all these.
A big down day, and obviously Elon Musk said material costs are coming down, but did make a comment just a couple days ago about lithium prices being crazy high still. So certainly a headwind there. But, obviously we're seeing a lot of these US listed Chinese companies, EV companies, down big on that news of President Xi's third term. But we also know that, as I said, competition is heating up. We're seeing those competitors ramp up demand, expand their product offerings. XPeng, which is down about 20% today as well, today released its most advanced semi-autonomous driving platform. So that could give, Tesla kind of a run for its money on that front. BYD, we know over the past 6 months, has outperformed Tesla in the Chinese market, in its home market, and is targeting global expansion. So there's a lot of concern on top of recession risk that, the competition could buyers could kind of go more homegrown in China. And, China accounted for over half of vehicle production for Tesla over the past 9 months. So certainly a fair share of risks right now for Tesla.
We've also got Tesla shares this morning after the EV maker. They had slashed the price of its Model 3 and Model Y vehicles in China. This comes after Musk said he sees elements of a recession in China last week. And it was actually interesting what he said on the call, because he had said that China was experiencing a reverse recession of sorts, but also still laying out some of the logistics limits that they were seeing within the region, specifically on cars in transit. They started to experience limits on outbound logistics capacity that they didn't anticipate. And so it's a question of how much within those logistics, within all of the headwinds that weren't talked about on that call, perhaps in China, or at least were omitted strategically from the conversation, what they're seeing in terms of the consumer appetite that we've discussed, and where that actually may be shifting more to some of the homegrown auto brands within the region as well.
Yeah, Brad, I'm going to flex for us, because we talked about the risk to China coming off of Tesla's earnings. That's what we do here. We talked about this, that they were likely to cut prices within probably the next week or so. So now here we are. Now, why is this important? Because China, I would argue, has been one of the key tailwinds to this Tesla growth story over the past 2 years. I think investors that have put money to work in Tesla have only known China to be full of upside surprises for this company. Now that dynamic is changing. Not only are they cutting prices, but this comes against the backdrop of what you just mentioned, more economic curbs potentially in China. None of that is good for the profit margins that Tesla needs to drive there.
Would this be an awkward moment to mention Tesla prices in China are now about where they were a year ago? Yeah, let's not mention that. Too awkward.
It's really remarkable, because for all of the growth that Shanghai Gigafactory, when it was launched, when capacity was brought online, all of the touting of what that demand profile might look like within the region. And we knew that there would be competition. This actually might be one of the first big tests in the face of some of that homegrown competition that actually may play out in other regions around the world too. And if it does, it's a larger question of, okay, at what pricing will the customers continue to be attracted towards some of the Tesla models out there on the market when you do have more options that are coming forward, especially in Europe? They just brought online within the past year Gigafactory Berlin. In the US, you're going to see GM, Ford, both of those companies, GM reporting later on this week. We're going to see exactly what that strategy looks like going forward from here and how they're quickly going to be ramping up production that is majorly hinging on how successful their battery is. And that's going to be the biggest kind of component that all of these companies tout going forward too. What's the range of the battery? How powerful is it? And will consumers feel confident enough with the network being brought up to capacity too?
Yeah, look, I mean, I'm not going to sit here and pretend that I've torn apart a Tesla vehicle or any of these vehicles before. I've never even sat in anything that Xpeng drove, despite us even talking to them. But look, these cars are cool. Yeah. I think what Xpeng has out there, just go online. It is, I would argue, more technologically advanced than what Tesla has in the market.
Brian, stop talking, dude. Digging your own grave right now, dude. Please just stop.
Same thing for Neo. And a lot of times these cars are priced lower than what Tesla has in the market. So of course, going to have to cut prices.
Yeah, it was just kind of fascinating for me to sit in the frunk one time.
Frunk? You sat in the frunk?
Well, you can sit in the frunk, yeah.
Really? Tesla shares right now sliding after the EV maker slashed the price of its Model 3 and Model Y vehicles in China. The stock is down nearly 5% in this session. This coming after Musk comments during last week's Tesla earnings call saying there are elements of a recession in China. Let's bring in Yahoo Finance's Praz Subramanian. Praz, this has a lot of people saying, look, is he trying to start a price war essentially in the EV market or the biggest EV market?
Yeah, I mean, I think you see the Model 3 coming down by 5%, Model Y base level by almost 9%. So there is concern there that demand is slowing. Musk, you said as much on the call. Said it was related to the property market, but that sort of trickles down everywhere. Yeah, so analysts are thinking that this could actually boost demand, but also could lead to a price war. Other competitors like Li Auto, Xpeng, among others, could follow suit, and they could actually do that with their pricing strategy. So I'm not surprised to see that. Also want to note that Electrek has seen that Tesla is restarting the referral program. Mm-hmm. So if you buy a car through me, through a referral link, you can actually get rewards points for stuff like free supercharging. You can also have raffles to get a belt buckle and free use of a car for you. So they're trying to just basically try to get that demand back up there in China. They had a record quarter in September, 80,000 sales or so. But I guess that's still not enough when you have the Shanghai Gigafactory kind of increasing output and lead times coming down. So there needs to be a way to kind of get those cars out the door.
Well, what does that mean in terms of their revenue coming out of China if they have to lower the prices?
I would imagine revenue would be okay.
How big of a hit will it be?
Yeah, I think revenue would be okay as margins would begin impacted. If they're making more than 80,000 cars a month out of China, that's serious demand. Maybe they'll start exporting more to other places like Europe. But for now, in the Chinese local market, it seems like demand slowing down, competition heating up. BYD, 200,000 cars sold last month. So that's a big part of that whole equation.
Yeah, BYD giving them big competition in China. Thanks so much for that, Praz.
So these Tesla China price cuts have certainly got plenty of tongues wagging, as expected. Of course, my guest on the channel yesterday explained exactly how things would play out, what the bears would say, what the bulls would say, and, well, hate to admit it, but that motherfucker was spot on. Now, if you'll excuse me, I'm overcome with panic, fear, uncertainty, and doubt. I'm going to call my broker, have them dump all my Tesla shares, and I'm planning to buy them back under $69 per share because Tesla has no demand. China demand especially has collapsed. The competition has finally come. Tesla should be valued just like an automotive company because after all, they are just a car company. And Tesla stock today is absolutely not the best risk-adjusted opportunity in the stock market that I'm aware of. Of course, the biggest takeaway of all in today's video, it's official. These are the facts. Tesla has officially stopped growing, just like my Patreon page, which now only features 184 exclusive videos and counting. Tomorrow it'll be 183 and then 182 because it's not growing anymore. And you should definitely not sign up. There's nothing of value there whatsoever, so don't join Patreon with the card in the corner or the link in the pinned comment, and I won't see you over there. Love ya.